The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here at TFNN. Don't forget you can listen to us anywhere on your mobile phone at TFNN.mobi as well. Right now, we got the S&P up 13.5 points. That's right, up 13.5 points. So despite the government shutdown and no progress in sight, markets rallying on up, shrugging it off, acting like it's not happening. Or maybe the Fed's interfering a little bit, right? Could be one of those two, such as a $58 billion injection yesterday, a $56 billion injection last week. Now, this is repos, where basically what the Fed is doing is they're borrowing money in return for, low-risk assets, giving to the banks, and they're saying this just happens to be at the same time. We're working things out, trying to do some low-risk just interest rate, manipulation here, trying to not, affect the QE too much, at the same time trying to get interest rates back up there, on down the list. And just happened to do 100 billion plus, in the last 7 days. So couldn't possibly be connected. Oh, by the way, there was some today. So let's go ahead and make that 7 days in a row right here on the Fed's website. We go over to our open market operations, okay? And we'll go over down here to temporary. And right there, right on schedule, 11:45, we got another $4.5 billion. Now, they are scaling down. I mean, obviously, this is much less than the $50 billion that they did yesterday. And sort of good timing. I mean, just happened to do $50 billion right as we're going into a government shutdown. Couldn't possibly have anything to do with why we're getting a market rally right now. And, it's really interesting when you start looking at the timing of those rallies, when they happen, how they happen. And, let's go ahead and let's look at it. Because the pattern we've been seeing is right around 10:15. All these things come into maturity, the whole auction starts up, and then things start going. So let's pull the indices up and see if it happens to be right around, say 10:15, where we really start seeing a takeoff. So we get a little drop down, and we get a market spike down here. By the way, right near settlement, okay? So almost a gap fill right there on the open. Get a nice market spike. Market starts popping on up, just oscillates for a little bit, and then right around 10:15, bam, 10:15, 10:30, we get that run up right in the markets. And where do they go? Pretty much right up to a deviation. So pretty much a one deviation move day. And one thing, I've been talking about, and sharing with some traders, I've talked about this, is looking at those deviation levels, but also using those market spikes to help you out. And simple definition for a market spike is where you have a spike in volume where the bar on each side, okay, is less than half that amount. So, for instance, like this volume right here, we had 28,000. Here we had 8,700. Here we had 3,800. So obviously way more than twice the amount. And by using this simple strategy, okay, so we're getting up here, we're getting close to a deviation level. I mean, what is that? Within 2 points, we get a market spike. It usually means the market's going to turn around, go flat for the day. And we can see right there, it does turn around right now. We just went into chop. So not a whole lot of movement left expected. The big boys who bought this puppy on up in the morning, getting rid of their shares right there around the lunchtime. And not an abnormal trend for us to see that. So again, seeing that right there. Let's go ahead and check out where the rest of the markets are at, and we'll dive into the deviation, see if we see any other market spikes. So right here we got the Nasdaq up 33, almost 34 points right now. We have the Russell up 10. We have the Dow currently up 73 points. Gold's up 39, down, almost two deviations, 39 and a half, maybe even two. We'll pull that one up, check it out. But it's a big move in gold. Silver down 3%. So both gold and silver are down 3% on the day. We got copper down 1.5%. We have oil down 1% on the day, down $1. So dollar, man, just getting stronger and stronger. Market's going up, dollar's going up. That's interesting. And Anyway, so we got a natural gas. It's up 1.5%. We got corn currently up, 4 points on the day. We have soybeans. Actually, sorry, it's down 4. I'm having a little problem with the screen resolution here. So down 4 points. We got soybeans down 15. So 1% down move right there on corn and soybeans. $0 currently down 1 pip. We got pound dollar up 13. We have the Aussie dollar up 74. Euro yen down 24 pips. US yen down 14. Pound yen down 22. Dollar CAD currently up 28 with dollar franc up 19. And one thing we always talk about is news. Well, one of the news reports is BLS, Bureau of Labor Statistics. So that's the entity that releases the unemployment rate and all that stuff. Yeah, they're closed, right? So we got the government shutdown in progress, and unless operations basically resume here in the next 24 hours, there's going to be no NFP report on Friday. So be aware and just check back with the BLS.gov to find out if that report is going to be released. But as of right now, there are no plans to release that report on Friday. An updated schedule will be posted once the government resumes. This will affect, construction and other reports as well that are put out. So again, no big play, which is our greatest play, right? One of our best plays, like 100 pip moves on dollar franc, pound dollar, euro dollar on Friday. Looks like we may not get it. So unless Congress just decides to do a little kumbaya and get all back together again. But right there, so just keep that one in mind. That one's off the table for the moment, okay? A lot of the other reports are done by, private, sectors, not done by this department. Unemployment claims, however, is, oddly enough, going to be released on Thursday morning. Okay, so that gets us caught up. Let's check out where some of the markets are. And next week, by the way, is a pretty light news week as well, just so you know. So be prepared for that. But, I'm sure the government hopefully will keep us very entertained and supply plenty of trading opportunities. But anyway, so lots of interference going on. So let's check it out. So we got the S&P. We got a really nice market spike right there, usually expecting the market to be flat, at least for a while. Sometimes do a total reversal. There's another market spike. This one would be right on the edge. Okay, so we got a spike right there. And it does come back down. And if you're doing I basically teach two different strategies. I guess I teach a lot of strategies, but two of the simplest strategies would be either one, going in and selling a binary slightly above it at the closest expiration. So, basically trying to get a decent, like $25 premium if you're doing something like this on this particular strategy. And so that would give you a little bit of distance. Has to break the low here. So you're looking up at this point, maybe at 12 o'clock. Might have got hit on that one, depending upon exactly what strike you chose. Or, whether or not you closed it or where it was. So that one may not work. You get the half deviation. And then, so when you're right there, it's just playing. But then you get a very dramatic spike right over here. And we're seeing that this one definitely is panning out for the day right now. Let's go ahead and it would have also profited, say you chose the 1 o'clock expiration. Now let's go in and let's look a little bit deeper. We got the S&P. Let's check out the Russell. Let's see where it's at. All right, so right here we got the Russell, and see if we can bring the zoom in a little bit better here. And maybe I got to just delete some drawings, because every once in a while you get all these little arrows, and what they'll do is it'll basically just mess up your chart, so you can't really see the volume as well as you want to. But let's see here. We'll clear that out. And I'm sure I have arrows on here from days of. So we'll reload the data, and then the next thing we'll do is we'll delete the drawing objects. So if you are a NinjaTrader user, just right-click. You go down here to where your drawing tools are, and then say Remove Drawing Objects. And you can get rid of all the chart markers and all the lines, and that'll help you out. So let's see. We got that one. Let's go ahead. We'll look at right there. We basically went like right up. Okay, so zoom back in over here. It's not getting rid of these markers for me. There we go. So much cleaner. Okay. All right, so we got the Russell. Again, down to settlement, pretty much up to 1 deviation. High to low. Okay, remember that rule. High to low. Settlement to deviation. Right, we got about 13 points right there. Let's go to the low. Let's go to the high. Got 14 points right there. So we hit that actual deviation level. Okay, very important that you understand when you're looking for that, to look for, sometimes you don't have to hit it to the tick. Look at that low to high, And that's a very, very helpful tip, is to keep that in mind as you're trading. You can even plot it. If you go in there, you can even go and plot what a 1 deviation move would be from the low or from the high. Let's say the market starts going like it has this morning. Well, we finally got a market spike right here, right on this deviation level. Not a real clear trend, except for we've been going up all morning. And so, you could go in, you could target half a deviation, you could sell in the money binary. I don't like that it's trending down, though. I usually like to reverse these. So that trade, I'm going to back off of that on doing a trade on that Russell contract, because it wasn't a clear, run up into the deviation, then a spike for a pullback. But I'm pretty sure we're going to see the market continue to decline, probably back down to at least half a deviation. All right, so let's go in and let's check out the NASDAQ. And there we go. So on the NASDAQ, we get the same market spike right here. We also had this spike pretty close to double the amount, right at the 1 deviation. We had 2761, 5028. Not quite double, pretty close. But again, the number one thing I look for, deviation settlement. When it hits those levels and I get a spike, close to a spike, I'm going to be paying a lot of attention to that. I'm going to be very wary about doing any kind of trades that would involve going long when I see something like that. Okay? So, and again, ideally, I want it. The best trades that, I'm going to look at on these right here is when, one, it hits it like a 1 deviation or settlement line, like it basically after it moves a full deviation. 2, I get a market spike. Ideally, it's double the amount. So since I did get one over on the S&P, didn't quite get on the NASDAQ, but I still could use this as a potential reversal point. Again, we're seeing the same spike right here. So it looks like they're sort of leveling off at the moment. And I would expect basically just choppiness at this point. And that's really what I'd be looking for across the board, is just a lot of choppiness. I'm trying to see if I can maybe even pull up a little choppy analyzer. But right there, I'd be looking basically for chop right now. Okay? So this was your good trade. We're not getting that complete reversal down to the 0.7 or half deviation line, which is fun for the out of the money because you get low risk, no stop loss. That's a nice benefit. But the disadvantage is time's working against you. So, whereas if you're doing in the money, time's working for you, it's already expired, and you're profitable. Say if you sold a strike right above the high here, once you got that big spike. All right, let's go ahead and let's check out the Dow, see how it lines up with the other indices. So making that a 1230 big spike. And right over here, we got a 1230, only half a deviation move. So only half a deviation. Notice we got the same similar spike right over here. Right around 11. We got a spike at the half deviation. Just sort of went into chop. So trade would have worked well. We got another spike again. Right there. Trade again would have worked great for you. So good in the money. Wouldn't have really got a good retracement trade. So, but perfect for the in the money premium collection, which, as you know, if you've listened to me for any amount of time, one of my favorite ways to trade. All right, stay right there, and we'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Diagnostic Trading Hour. And let's check out where we're at right now on gold. We got gold currently is down over 2 deviations. Drop, and just flying on down. And, man, I mean, it is... almost crashing right there, right? So we go on down, we bust into the 2 deviation level, and look at this, we get a nice spike, right? So have to wait until it's over right about here. Could have went in and done, a series of binaries, 9 o'clock expiration, 10 o'clock expiration, right there on that perfect volume spike. So also you had an early morning right at 8 a.m., but that's half. Remember, I like to get 1 deviation. I mean, that thing just flying on down, getting some massive spikes. And be careful on the spikes, like right, just to, an FYI, on right on the market open. You can trade them, but just have your finger ready. A lot of times it'll work great, but sometimes if you're really getting just a massive move, a fast move, every once in a while you'll see these things just pop and, keep going. So be careful, like right there on that open. Now, I know gold opens a little bit earlier, right around 7:20, but anyway, so just a nice volume spike over there. Let's go ahead. Let's check out some of the other markets. We'll go ahead and look at silver because it's also down 3% on the day, but still within that 99.7 probability range. So, deviations doing their thing. Silver, let's see. Looks like implied volatility is waiting to update still. So there's been some major issues going on there. So, but some crazy, look at that 3% move. Massive spike down right here. Okay? Check this out. And we get a big spike and then before the pullback. So those spikes will really help you out a lot. Go through and start looking at them in your different trades. Let's go ahead and check out corn. We'll see where the corn markets are at. And right now we can see corn moving on down. If we get down here to 0.7, now we got a full deviation, right? Because we went up almost 0.5. So we finally broke right into a deviation. This first time it touched it, but we didn't get a market spike. Notice how that's about 30% taller. Over here we get a massive spike, and these two bars you basically have to put together because you do get that drop off on the bar after, and the drop off right here gives you a great reversal again. And then go right here. We got another spike, but this one's not right at a deviation, so not necessarily a tradable spike by itself. You want it at those deviation levels when you're placing those trades. All right, so let's go ahead and check out soybeans. So right over here on the soybean market, and see where we're at. Get that loaded on up. And let's see, we moved on down to half a deviation. It flew back up. Let's see, down to 0.7. Got a spike on the 0.7. So right here you can see that pretty clearly. And so right there, you see the spike here, but it hasn't hit the deviation. You see one more spike. It has hit the deviation. Notice the low volume on these two sides, giving you a great reversal trade, either to the 0.7 or just in the money, and times on your side. So it comes on back down. We're not really getting the spikes with the double on both sides. Comes up here. We do get another spike. Look at that. So that's more than double. It's like 3 times the amount. The bigger the spike, the more I like it. Got a massive spike right there, 11.25. Perfect time to go in and, just to point this out to you. Spike, and then you got 2 lower volumes for you right there. Okay? And that's happening right at, it's running up, hits this 0.5 deviation level. Great turn right there. Calls it perfectly. So not only do you get the pivot on the deviation, but you get the volume confirming the pivot on the deviation. So when it's just going into the pivot and there's not a whole lot happening, you don't have a lot of confirmation. Like we didn't have any real confirmation right here when it hit this one. Okay, we didn't have any great spikes. But on this one, we definitely had a very clear confirmation of a reversal trade. And just a good, simple, easy trade to take advantage of. Went back to the 0.7. So you had a couple of them. You had, right here. Go in. Got that volume spike right there, right when it hits the deviation. And again, if I mark the arrows up so you can see it. So right there, low volume. Right there, low volume. And right there, high volume. So obviously this bar has to be low, this bar has to be high, this bar has to be low. So on the close of this bar, I'm looking to buy when it breaks the high of this. Buying either an in-the-money binary or an out-of-the-money, like targeting, the closest deviation level that's coming up. So, or you can do both, and that's what I call a double binary strategy, where I buy an in-the-money binary and I buy an out-of-the-money binary, and let's just say it stays flat. Well, the in-the-money will cover the out-of-the-money, but if it does go up, I take profit on both and bring in a nice return. And in both cases, I'm pretty much, as long as I'll get out if it hits my strike, I'm risking, basically $50 to make at least 50, if not more. I actually could make 100 on a $50 risk because I could make 75 potentially on this one and make 25 on this one if I bought it for 75. And that's pretty simple. But you only get 1 or 2 of these trades a day. Okay, so this isn't real high, intense, fast trading. You're just looking for those spikes, but you can pull it up on 10 charts at once, and you just sort of chill out when it hits a deviation level. Look and see if there's a market spike. If there is, there's a trade. All right, stay there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. So let's check it out. We got oil right now, and it is moving on down. And let's check it out. We haven't hit one deviation, or have we? Okay, so we're not on the one deviation line, but you can take that settlement, draw it down to one deviation, so about $1.50 right there, and then go on over here and let's check high to low, where we're at right now. We're making new lows at the moment. Got $1.50. So we're actually at a one deviation move from high to low right now. The market is definitely in the progress of a potential spike. So you see we have very low volume, we have a very high spike. So now what we're looking to do is see, hey, do we have low volume on this next bar? So if we do, then we have a high potential reversal trade. So what could you do to maybe take advantage of this potential trade? Let's look at it. Let's look at a couple possibilities. Okay. So go ahead. Now I'm going to open up the Diagnostic Box Spread Analyzer here. Get free access to this. Check it out over there on TFNN.com. And we'll go on in here. Let's scroll down. And this shows me contracts that are coming up, buys and sells. So if you don't know what you're doing, by the way, go over here and just reset all your filters. Okay, so if this is new to you, first thing to do, reset the filters. Right now we are getting up move, but again, we're getting it on low volume. So definitely could be a great reversal trade for us. And the big piece we just want to watch and see, where do we end up at the end of this 5 minutes to see if this is going to be the trade that we want to take advantage of. All right, so once we've done that and we got the scanner, up and running, so I'll put this over here. We'll put the scanner over here so you can see sort of both sides. We'll keep an eye on that chart right there. And then we're going to go in, and you got to log into your Nadex account, okay? So you can get a Nadex account. Just click on the Nadex banner on the right side there, TFNN. And all you got to do is go to, I'll bring the screen up. I'll show you exactly where to go so you know how to do this. So hop on TFNN.com, click on Nadex. Then to get a demo account, let's go to demo trading account. Fill in a username, first name, last name, phone number, and email address, and that'll get you all set up and ready to go. So pretty simple. It takes about 15 seconds, literally, for you to get going. And all right. So once you got that done, next step is you'll just quick log in. You can fund an account with as little as $100 to get you going. Pretty easy. And then the scanner will actually recognize when you're logged in on your account. Okay, so right here you'll actually notice, let me close these out. The scanner now notices, hey, you're logged in. And we'll see, any trades that you might have going on over here, okay? So once you've done that, then the next step is to go down and then check out crude oil. So we got all these contracts going on, but we want to filter them out. So I'm going to say buy. Okay, because I think crude oil is going to bounce up with this volume spike at the 1 deviation level, and then I can go and I can put something like 65 to 95, and I probably don't want to be looking at weekly expirations, so I'll bring this down at least to the current day. Okay, and scroll down and see what are my choices for buying. So I can buy at 101.10. But that's actually higher than the 101.05. But I got 100.9. That's pretty nice. That's right down there with the deviation. I can even get down to 101. So I have these two possible choices. Right now, the other one was only $96. Don't really like that one. Also, I want to see not only this 5-minute bar end, but I want to see the high of it be broken. Because what happens is it goes up a little bit and then just turns around and keeps falling. Okay? So I want to watch that volume bar. Make sure that the volume, we got a couple more minutes left on that volume bar, so we're watching this bar right here, okay, to see if it's basically at least half of this volume bar. So we can see the volume right here is 2963, so we're basically looking for this volume to stay under 1500. So if it surpasses 1500, we pass on the trade. If it stays under 1500 by the end of the 15 minutes, then we have a volume spike. Now we need to actually see some momentum in our direction, so we're going to need to see it break the high of that trade. Looks like the lowest I can get right now is 101, which is just below, but at least it is below that strike price. So it's a potential trade, but we got to let everything play out. Don't try to rush into it. Biggest mistake traders make is one of the biggest mistakes, I guess, forcing trades. Taking on too much risk and forcing trades. So the 101.10 is too high. It needs to be, basically below the low of this bar. So the low of this bar is 101.06. So we have the 101 as a possibility. So if I want to get ready for it, again, we're not ready. Even if we stay under 1500, which we're really approaching it, we'll see. It only has like another minute, so I bet we stay under it. Still going to have to break the high of that bar. And let's go ahead and get that contract ready as a potential contract. So what I'll do is I'll just click on it. It'll open up the contract for me. I'll lock it in there. It's a potential contract. I'm not entering anything yet, okay? So on the volume, did we get the volume we wanted? We did. So it was 1295, which was less than half of 2963. But I still need to see this bar break the high of this bar right here. And this is one option. What is another option? Another option is I could target, say, the next deviation level, like 101.59. So, or I could do both and do what's called a double binary. So how would I do that? Because I'm not going to see that with the premium collection settings I have on the scanner. So now I'm going to change these settings up a little bit. I'm going to go over here 5 to 35. Okay? By doing that, then I'll be able to see the out-of-the-money binaries that I can look at. And let's see if I can get one that's close to 101.29. There is a 101.30 for $24. So this is another potential choice for me. Okay? So let's analyze these two choices. See if is one better. What are the advantages or disadvantages, et cetera, across the board. So we have two choices right here. One of them is going to target 101.30. So we're going to go in and we'll just make a little marker right there. So one of them, we'll use this line right here. That's the strike. Okay, the other one is saying that the market will stay above 101. Okay, so let's look at the risk and reward, the analysis basically on these trades. One piece to note is the in the money will make money if the market stays flat. So the 101 right there, if the market doesn't do anything, it will make, approximately $20 to $30 on the trade, depending upon the exact entry price we get. And we have till 2:30 for that to happen. So I could go in and let's say I end up buying it for say $75. I could sell it for $95. I don't have to wait till 2:30. Okay? But if it stays flat or moves up, then hey, I got a great trade. If it moves down but stays above 101, I have a profitable trade. Again, I need to wait for the current bar to break the high of this bar. If it doesn't, we'll just back off and wait for another potential trade. And then over here we have the out of the money, the buying the 101.30. Now, this one has a $23 risk. It has a $77 maximum profit potential. That's if I waited until 2 o'clock and held it and it expired above 101.30. Not necessarily the best plan, because maybe it does go up to 101.30. Maybe it comes back down. I'm not quite sure what's going to happen on that trade. So I'm really, rolling the dice, you could say, if I just go in and throw that trade on and hold it till expiration. So I'm definitely going to have a take profit, usually when it hits that strike. Now, this one expires at 2 o'clock. I have less time for it to move, and it's an out-of-the-money binary. I'm also picking a really, really close deviation. I'm not actually even picking the 0.5 deviation, the negative 0.5 deviation here, which is 101.59. So I could go, I want a little bit more time. If this thing does reverse, I think it, pop up 30 pips. So based on that analysis, because you can even see right here, it was a resistance line, and then it became, or was a support line that became resistance over here. And so I could go in and go, there is a 101.50. It actually gives me till 2:30, so I get more time on the trade. So I may actually be more inclined to use this 2:30 contract, because time is working against you on an out-of-the-money binary. So if I choose this out-of-the-money binary right here, now I have more time to be right. Okay? And I could buy it for somewhere around $25. If the market does get to 101.50 by 2:30, then I could sell out of it like around 50, okay? Which gives me a 1-to-1 risk-reward trade. So it looks like we're about to bust the high of this level, so I'm going to go ahead and throw on this out of the money over here. Put it on, get filled for $25.50 on that trade. Now, if I want to help cover some of that premium, okay, just in case it doesn't make it all the way up, I do have that option. But first things first, I want to set my take profit order in. So I'm going to go in here, I'm going to set this thing at $43, and I'm going to change it to a sell and hit place order. So I got filled on the trade, and now I have a take profit order sitting in the market on that oil contract. So if it does continue to rise, I bring in a nice $20 or so. And I have until 2:30 for it to get back up to 101.50. Right now, it's moving pretty good in my favor. So we'll see if the contract continues to go on up. And again, I could hedge if I want to. I could go in, I could buy the in-the-money binary saying it's going to stay above 101. And if I do hedge it, that'll reduce my risk or, eliminate my risk so long as it stays above 101, depending upon what price I buy at. I could also do what's called a ratio binary. And that's where I may end up buying, say, or buying 2 in the monies and buying 1 out of the money, so that way I get enough premium to cover both sides. Okay, so there's a lot of ways that you can play these trades. And the biggest thing, tip, reminder, whatever I can give you, is, one, if you're doing it in the money binary, make sure you do limit your loss by exiting if your strike is hit. Okay? So that way, if I end up buying this thing for, say, $75, like it oscillates a little bit. Let's say I buy it for $75, okay? Then I could go in and, notice how the thing's just bouncing perfectly off the 0.7. So it's going to have to break through 0.7. But I go and let's say I buy it for, say, $75, whatever. I cover the $25 risk on the initial trade. If it goes down to 50, which will happen if oil goes down to 101, I get out of the trade. If I buy for $75 and I sell for $50, I only lose $25. That covers my $25 risk on the out-of-the-money binary I bought. So now, at the same time, I increase my risk, right? Because I add on another $25 potential risk. My total risk on the trade, if I bought the out of the money for $25 and I bought the ending money for $75, but I'll get out of it if it hits 50, my total risk on the trade is $50. And let's say I do buy the 101 and the market falls down, it hits 101, it kicks me out of the in the money binary. But then before 2:30 rallies on back up and gets me out of the 101.50 and makes $25. You know what? I'm break even on the trade. So I could actually lose on the oscillation, but end up making money in the end, just depending upon where the contract goes. Okay, so there's a lot of cool ways to do it, and people go, this is, there's so much. Well, they're called options for a reason. You have options, you have choices, and you can use those choices. So you don't have to just buy or just sell. Think of different ways to hedge. Think of ways to take advantage of stuff, but have targets. So important is to have targets. Know what you are aiming for. Don't just randomly buy a binary. I was talking to a trader yesterday on the phone, and he was going in and he had a decent system down, but as soon as he got a long signal on a system, he would just go in and just buy. And he's like, I'm looking for a $70 binary. I'll just buy it, and because he'd heard me talk about like buying for 70, getting out at 90, or getting out at 50. And but what he wasn't taking into account is, well, just because it's priced at 70 doesn't mean that's a good strike. Because if you go in and you buy at 70, but it's only a point away, then the chance of you getting stopped out is pretty high. Okay, so we went through and basically talked about, okay, where should your stop loss be if you're trading the futures market or trading the forex market? Where would you put your stop loss? Because that's where we're going to get out. If it hits that price, okay, we're going to get out at 50. So he actually had to choose a little lower strike, and he had to choose a little more time to get the right one for him for that trade. Not that much further out, but, basically it's just a matter of the right strike selection. So one thing I challenge is when you're buying, or selling these binaries or the spreads on Nadex, is to go in and say, why am I buying this contract? So if you've ever traded options, like on Apple, you should have a specific reason on why you buy a specific call or a specific put, or you do a certain debit or credit spread, or you're doing butterflies, or you're doing broken wing butterflies, or whatever strategy it is that you prefer to use. You should have a reason for doing that, okay? So since you have those reasons, you need to carry that same model into trading on Nadex. Have a reason for the specific strikes that you buy or sell. And if I'm doing an in-the-money binary, I want that thing to expire as quick as it possibly can. If I'm doing an out-of-the-money binary, okay, I want that thing to give me as much time as possible, because one time's working for me, so the faster it burns, the better. The other one time's working against me, so I want as much time as possible to be right. Okay? Even right now, if you decide to do this trade at this moment, if you got a little bit late on it, you could buy this for 18, you could buy this for 78, you'd more than cover the cost if it stays in the range doing a double binary. And if we go on back up here, what we can see is, let's flip this back to 65 to 95. We go back in and see, are there any other in the monies that we might like? And right now we're still seeing that 101, same contract, got that 101.10. Remember, that's higher than our stop. We're not going to choose that trade. Even though we might like it, we're not choosing that strike because it doesn't fit within our risk management model of how we trade on Nadex. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position, subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global as a core position for 6 months. A current position, entered as a turnaround company, is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, going back here to the Diagnostic Trading Hour. And so just a reminder, we do have on the out of the money, we have the in the money. If it stays in the range of 101 to 101.50, we basically are flat on the trade. Okay? If we go in and if it goes up, then we can be profitable on both. Okay? And if it goes down, we may get, say, stopped out of our in the money contract, but we don't have to close our out of the money contract. So it's very low defined risk. That's the advantage of an out of the money contract, and it could still have time to come back and be profitable. So this puts a lot of different pieces basically in place for us to have a very low risk trade with a decent probability using simple, very simple statistical and technical analysis, volume analysis combined with the deviation levels as basically using it for our entry point. Also, I was looking for CHOP. CHOP basically being a divergence between oil futures and the OIV. Okay, a lot of people look at OVX, which is inaccurate. That's an ETF of oil. OIV is the actual implied volatility index of the oil futures contracts. And so if I see a divergence on that, I love that because I'm doing a trade that is counter trend, right? Market's been going down, 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 down on oil, and I'm looking to buy. Okay? And I'm waiting for that right time. Well, my cue is, boom, the market spike at a deviation level. So we got a 1 deviation from high to low. We got that market spike. And And then we got that breakout of the high of that spike. And then we go in and we look at the chop right there on oil, which says, hey, you know what? Implied volatility is starting to change. It's lightening up. So it's actually going long. I'm actually seeing the OIV actually decrease, which means that they're lightening up on their options. They're taking their hedges off. So therefore, it's more likely that oil will rise because options move before. Okay, option implied volatility pricing moves before the actual larger contracts. And so anyways, there's a lot of different ways to trade it, but you've seen, this is just one of many. But it's one that I like trading. Now, you can trade this on 5, 10, 15-minute bars. You see the volume spike pretty much across the board on them. Let me add on this little shortcut. It makes it easy to do drawings and stuff. Then to do the quick keys. And I thought I added it one more time. There we go. Okay. So you can see the volume spike right here on the 5-minute bars. Okay. You can see the volume spike right there on the 10 minutes. Not as large, not as big. We didn't get that. I love when I get all three of them. And you also see it, though, on the 15-minute. Okay? So we still be waiting on the 15-minute to give us our, basically our tag for entry. But you do see that right there. So in all three of them, we are at least seeing at least some level of a spike with getting the exact requirements there on the 5 minutes. And then I go on down over here to the 5-minute bar itself to look for my entry. So I don't have it says 10-minute deviation stop loss, but flip it over to 5 minutes for this trade that we're doing right now. And we're just targeting getting up there to 101.50. So if we get to 101.50, then we're going to close the trade out at 43. We're about 10 ticks away. So we might get up there, before the expiration comes on up. I don't know if we're going to get up to there before the hour closes, but I have a take profit on that 101.50 at 43. And I have a take profit on my in the money 101 at 95. Okay? So just in case you are following along in your demo, maybe your live account, but in your demo account, I just want you to know where my take profits orders are currently sitting at right now. And just to show you, let's see here, let me bring the other one up so you can see orders right there. But so right here, you can see that I have a take profit at 43 on the 101.50, a take profit at 95 on the 101. And so if this one gets filled, it hedges this one off. If this one gets filled, great. And we have both trades take a profit. Anyways, hopefully I picked up a couple new tips and tricks. Got to see a little bit of this live in action, live accounts. And y'all have a great day.